Saturday, September 9th, 2017, Maneco 64 here. So I want to look at the precious metals market, the week we've had, the stock market as well, and cryptocurrencies, and talk a little bit about the news out of China yesterday about the cryptocurrencies that led to a bit of a dip in the cryptocurrencies. First of all, just want to go through the numbers here. Yesterday for gold, we closed at 1346.34. That's spot gold. So gold was up 1.66% on the week. Previous week we closed at 1324.75. So even though we didn't close above 1350, it was still a fairly good week. Silver closed at just below 18. They got it below 18 after the COMEX close. Spot price closed at 1796, up 1.42% on the week. We closed at 1770 on the 1st of September. In pound terms, gold was basically unchanged at 1,020. Yesterday we got up to 1,030, but we had gold came off and the pound went up, so that's why we finished there. Stock markets, S&P closed down 0.61% for the week, and the Dow closed down 0.78% or 0.87. So now I just want to have a quick look at the charts and the moving averages. Long-term chart of gold here, as you can see, when we were in the bull market up to 2011, the black line is always trading above the orange line and the green line. The black line is the 50-week moving average, the orange is the 100-week, and the green is the 200-week. And we haven't had this relationship since around beginning of 2013, when the 50-week went below the 100-week. But now I can tell you that the 50-week is comfortably, well, just about above both the 100-week and the 200-week. And also now the most interesting thing is that the 100-week now just moved above the 200-week this week. You can't really see clearly in this chart, so I'll bring the shorter term chart so you can see it. There you go. We just moved above the 50-week, 100-week, sorry, just moved above the 200-week. So that's quite encouraging there for gold. What else? Let's have a quick look at silver. We got the moving averages here. Silver, the 50-week is still below the 200-week, but is above the 100-week. So we need to, silver is doing a little bit more catching up, but it's starting to move here. We closed comfortably above all three moving averages, which is encouraging for silver. And now I want to look at the, let's have a look quickly at gold and pounds for my UK viewers. Still looking pretty good. We got up to 1,033, or where was it this week? We got a high of 1,034, which actually beat the high from April this year at 1,032.70. Not a great close for the week, but virtually unchanged from the previous week. The moving average is looking good. The 50-week comfortably above the 100, and the 100 comfortably below the 200-week moving average. That's XAU GBP. So now just want to have a quick look at the S&P 500, and it just goes to show you how these moving averages are important. And this is going back to 2008. You can see there in 2008 when we crashed how the 50-week moved below that 100-week. And then the market crashed into the low in 2009. And you can see when they started doing QE1, QE2, Operation Twist, and QE3, you would have thought, the market seems to be stabilizing now. But I think they just wanted to make sure they got the market back above the previous high. And that's what it did to it. And there's an interesting interview that I'll put up in the cards and a link to it. and it's Richard Fisher, who was the president of the Dallas Fed, and it was March last year, and they were talking about QE, and he basically said that QE was like injecting cocaine and heroin into the markets, and that we're now on Ritalin. And he actually said that he voted against QE3 because he thought we didn't need it. But you can see here the stock market now, you know, the technicals here are looking very comfortable. The 50 week is way above the 100 week and the 200 week. And the market is way above the 50 week, more than, you know, we've seen here in the last few years. So maybe that's why the Fed is a little bit concerned that the stock market is moving away from, you know, from fair value. You can see that the last time the S&P was testing these moving average relationships was last year, you know, after we had a really rough start in the beginning of the year. But the market has been able to, you know, rebound, and that relationship between the moving average has improved. So I would say, you know, if there's going to be a correction, it will be in the beginning, could be fairly sharp. Some analysts, cycles analysts, think that the bear market has started and we could see, you know, a bottom in only 4 years. So it could be a slow grind in terms of these moving averages moving back down. But I would expect maybe you know, an initial like big dip, and then a consolidation, then just a grind lower. We'll have to see, but it still looks quite comfortable as a long in the stock market. But you never know. So now I want to talk a little bit about the news that came out yesterday about cryptocurrencies. It's, you know, Zero Hedge, their headline was Bitcoin crashes on massive volume as China plans to shut local exchanges. So you see that headline, you say, oh, the Chinese are going to shut all, you know, cryptocurrencies exchanges. But then, you know, I had a look and listen to Box Mining on YouTube. He's got his also a blog, and he wrote a little story this morning. Chinese exchange ban caused sell-off, and he says a new article appeared on Chinese news media outlet, Caixin, claiming that Chinese authorities are looking to close cryptocurrency exchanges due to risk of money laundering. Caixin.com posted an article titled "The Age of Crypto Exchanges is Over," and sparked off a massive sell-off that caused Bitcoin and Ethereum prices to drop 5 to 10%. And it says, whilst it was previously discussed that rumors are sometimes the precursor to legislation in China, this should be taken with a grain of salt. Due diligence needs to be done as to where the rumors came from. That is, for example, state-run media or just regular media. And he says in this case, the rumor was posted on regular media with very little sources of information and no new quotes from government officials. So he's saying, first of all, you know, the news in China came out 9:15 p.m., which is 12 hours ahead of New York. And he says usually these stories, when they have some bone behind them, they come out at 3 p.m. Beijing time. He also says that one of the biggest exchanges in China, the BTCC, he put a tweet here from them. It says BTC China exchange is operating normally and has not yet received any new directives from Chinese regulators. So a lot of this story could be a rumor, sometimes not. As Box Mining said, rumors don't mean that necessarily you're going to get new legislation, but it's possible. He says, though, that a lot of this Chinese contacts and friends are really kind of panicking and worried about what's going to happen. He probably thinks it could be that you have a lot of stories of new exchanges popping up in China and stealing clients' money. he thinks this could be just another round of, the government imposing rules and regulations like anti-money laundering, AML, and also know your client, know your customer. So at the moment, the Chinese exchanges are still up and running, and we'll have to see if there's anything coming out of the government. So now to EOS. Someone asked me if it was better to buy EOS through the token distribution or to buy it in an exchange. And I've done some analysis because I've bought quite a bit of tokens. And one thing I can say, this is from their website, EOS, it says equal opportunity. To ensure inclusivity, EOS tokens have no predetermined price. Rather, price is set by market demand. This mimics mining without giving potential unfair advantages to large purchases. So what they do, and I took a screenshot of the latest period that finished about an hour or so ago, and you can see there, there's 3 seconds left. I took a screenshot, and they received 3,855 Ethereum. And I rounded it up to 4,000 because I had to, I refreshed it about 10 seconds before the end, and then I took the screenshot. So let's say it was up, at 4,000. That means you divide 4,000 Ethereum by 2 million, you get a price of 0.002 Ethereum per token. So and it depends on the demand. If it was less, it depends on the demand of Ethereum. So it's not like a set price, like in the open market. And I went through, because I started buying some of these tokens on the 25th of August, and I've done an average price. I've looked where Ethereum was in terms of dollars, and I can tell you that my average price is 0.835 cents. And where are we now? Let's have a look. EOS. So EOS is now 0.86, so my average price is above where the market is. But one thing I noticed, though, I look at the different, I did 4 times I bought some tokens. And the latest, which was this morning, my average price actually was 0.577 cents. So way below the market price of around 86 cents. But looking at the other ones, and where EOS was at the time that I did the token sale, when I sent the Ether, my prices were pretty much within the range. Like the first time I bought, I got a price of 134, and the market that day traded between 133 and 144. The second time, I paid 103, and the market was between 85 cents and 116. The third time, the market was between 85 cents and $1.02, and I paid 88 cents. So yes, today it was very good. I mean, I paid 57 cents, and as you can see, since then, the low has been 0.77. So I think it's probably better to do it through the EOS token distribution than do it in the open market. But all in all, it looks pretty interesting. If you enjoyed this video, please give me a thumbs up, share it far and wide, and if you haven't subscribed to my channel yet, please do, and I'll talk to you later. Bye.